Hello, everyone. My name is Dr. Arash Sadeghi, and I'm a lecturer in international business and strategy at Aston University. In this video, I'm going to provide a summary of an article that we have recently published in the Journal of International Marketing. The title of this article is Perceived Export Performance, a Contingent Measurement Approach. My co-authors in this paper are Professor Elizabeth Rose and Professor Madsen. Professor Rose is a professor in international business at University of Leeds in the UK and Aalto University in Finland. And Professor Madsen is a professor of marketing at University of Southern Denmark. Before providing a detailed explanation about this article, in this slide, I'm going to provide a brief summary of this paper and go through the main objectives, the sample and data collection, and the methodology that we used in this paper. This article has two main purposes. The first purpose of this article is to adopt a contingency approach and offer a detailed and comprehensive measurement framework that systematically captures perceived export performance based on what is valued by individual managers. The outcome of this article related to this objective is the Individualized Perceived Export Performance Framework, or IPEP framework. This framework accounts for various exporting goals, criteria, and benchmarks that individual managers employ for evaluating export performance. In addition, this framework accounts for variations in the relative weights of these elements for each manager. The IPEP framework's extreme level of detail in capturing the priorities of managers for export performance evaluation comes at the cost of complexity in terms of data collection and analytic procedure. Therefore, to address these challenges, the second purpose of this article is to develop a parsimonious measure of export performance that retains the benefit of the comprehensive IPEP model, while is more accessible and easier to implement for empirical studies. The outcome of this step of this article is the simplified model. The simplified model is easier to implement for empirical research while retains the key benefits associated with the IPEP framework. The sample and data collection in this article, we have demonstrated the feasibility of both the IPEP framework and the simplified model empirically based on a sample of 78 exporting SMEs in New Zealand. Also, we use this sample to compare the results of the IPEP framework and the simplified method to check the reliability and validity of the measurement model. Our comparative analysis offers evidence that the two methods produce similar results. Method and data analysis, the operationalization of IPEP framework in this study is based on a novel methodology that is called Fuzzy Analytical Hierarchy Process, or FAHP, Fuzzy AHP, which is a powerful and flexible multi-criteria decision-making tool that is useful for handling complex problems. Later, in the upcoming slides, I will provide further information about this methodology. Let me start by providing a brief overview of why export performance evaluation matters. Accurate performance measurement is critical for managers as it provides an indication of the overall success and failure of the firm and determines further continuation or withdrawal from exporting. Further international development of the firm is highly dependent on the allocation of resources to the right export ventures, and therefore it depends on the sound judgment about export performance. Generally speaking, resources are allocated to the ventures or to the markets that are perceived as good performers or potentially good performers. In other words, those export markets that are performing poorly as perceived by the top management will lose the battle for future resource attraction. Also, from an academic perspective, export performance is arguably one of the most important dependent variables for researchers in international business and marketing. Therefore, accurate conceptualization and measurement of export performance is critical for better understanding the behavior of firms in the international context. However, despite the practical and theoretical importance of export performance, a critical review of the literature reveals that there are important limitations remain in the conceptualization and measurement of this construct. So this is to the extent that Sosa et al. In 2008 expressed that the literature on export performance is probably one of the most widely researched and least understood areas of international marketing. Despite promising developments in the export performance measurement literature, it seems that academic research in this area has not kept pace with the evolving demands of the managers. One of the major limitations of export performance literature is that it has not been really addressed the fundamental role of firm-specific idiosyncrasies in evaluation of export performance. For example, some of the most widely measures of export performance that are commonly used in the literature include XPerf, a measure that developed by Zhu, Taylor, and Osland in 1998, and another measure that is called STEP, a measure that is developed by Legos and Legos 2004. These common measures of export performance do not explicitly account for potential variation in priorities and perceptions of managers in performance assessment. The majority of previous export performance studies include an implicit assumption that we argue is not fully in line with reality. It is widely assumed that exporting firms follow homogeneous goals and use the same benchmarks and indicators in their export performance evaluation. Under this assumption, export performance can be evaluated against uniform and predefined criteria. However, some of the previous studies have questioned the validity of this assumption. Please see the quotes from two of the studies that are relevant in this area. In reality, it seems that export performance assessment is context dependent, and you can see it in these quotes that I've provided here. In an article by Carneiro et al. 2016, you read that managers do not seem to have any single universal set of criteria by which they judge the degree of success of their export ventures. Or another example is this: the relative importance of export objectives is likely to differ both across firms and within the firm over time. So the idea here is that export performance assessment is context dependent. Therefore, appropriate conceptualization of export performance should account for each firm's strategic orientations and preferences. The assumption that we have in the literature that managers are using homogeneous goals and use the same indicators and benchmarks is coming from an outsider-looking perspective. So this outsider-looking perspective in the majority of existing studies limits the relevance and applicability of some of the prior studies and may lead to a mismatch between the definition of export performance by the researchers and the definition that managers use in their organizations. There is ample evidence in the literature that firms differ substantially in terms of their exporting goals. In this slide, I would like to provide a schematic example to show the importance of incorporating firm-specific idiosyncrasies in assessing export performance. Let's say that we ask from 3 managers of exporting SMEs about their main goals in export markets and the way that they assess export performance in their organization. The first manager may say that my main priority at the moment is to increase sales and to a lesser extent profitability and market share. The second manager may say that my main goal is to increase profitability and to a lesser extent sales and increasing international foothold. And yet the third manager may say that at our current stage, my main goal is to increase foothold in the international markets, and financial goals such as sales and profitability are less important for me. As you can see, measuring the export performance of these firms is a quite complicated problem, as these firms do not treat their goals as equivalent and accordingly allocate different levels of resources for pursuing different goals. However, in reality, the problem is even more complicated. Not only different managers may perceive export performance differently, but also for each manager, the priorities may change over time. For example, a firm in early stages of export development may put more emphasis on measures such as export sales and profit, while a more experienced firm may find market share related measures more relevant. So the preferences may change over time for each of these firms. In this situation, using a universal, generalized model for measuring export performance can be problematic because it may lead to a mismatch between the researcher's definition of success and that of the manager. In this case, judgment based on researcher definition may be misleading because the firm's resources are not actually directed at the goals selected by the researchers. For example, profitability may not be the most appropriate measure to capture the export performance of a firm that is pursuing other strategic goals, such as market share or increasing foothold in the market. In this sense, while based on achievement of their specific goals, the managers might consider themselves as successful. The researchers' chosen indicators might mislead us and provide a distorted picture of the performance of the firm. So this inconsistency speaks to the need to revisit the conceptualization and measurement of export performance if we want to better understand the behavior of SMEs in international markets. Reflecting on this, the aim of this paper is to provide a more nuanced understanding of subjective aspects of export performance assessment among SME managers. And we want to do that by developing a holistic measurement model that reflects firm-specific individuality by explicitly accounting for managers' priorities in the evaluation of firms' export performance. In other words, we aim to develop a customized measure of export performance that is tailored to each individual firm. But before that, we need to understand the main dimensions that are important in defining and measuring export performance. We suggest that based on reviewing the literature, assessing export performance requires decision about 5 sets of alternative perspectives. The first one is level of analysis. Export performance can be measured based on various levels of analysis, such as firm, country level, or market level. But most of the previous studies have tended to use firm as their level of analysis. Following the literature in this research, we also use firm as a level of analysis. However, the procedure that we introduce in this study can be applied for measuring export performance at other levels of analysis as well. The second dimension is mode of assessment, objective versus subjective. Objective or hard indicators of measure of export performance are basically measures that are using reported financial metrics. On the other hand, subjective indicators are judgmental and reflect the respondents' perceptions regarding performance. We believe that the most important limitations of objective measure of export performance is the fact that performance evaluation is highly idiosyncratic. So a financial outcome that is perceived as success by one company can be a failure for another company, right? Or even for the same company under different situation. Therefore, we cannot judge the performance of firm only by looking at the objective data. And we need to incorporate the strategic orientation of the firm and the goals that they are pursuing. The third dimension is type of performance, including financial and non-financial performance. Although there is evidence that firms generally pursue both financial and non-financial goals in their organizations for their foreign business, most previous studies focus primarily on financial goals rather than incorporating non-financial goals as well. But in this study, we include both of them. The next dimension is benchmark. So SME managers often employ references or benchmarks when evaluating export performance. In this study, we incorporate 3 benchmarks, including firms' own plans, competitors' performance, and the performance of the firm's domestic operations. Finally, the last dimension is time frame. There is evidence that managers tend to measure their export performance or assess it both in the long term and in the short term. However, the priorities might be different in the short term and long term. Therefore, in this study, we measure export performance in the short term and long term separately. Here is an overview of the various dimensions of export performance and our approach regarding each dimension in this study. Before moving on and discussing about the measurement model, let me provide a definition of perceived export performance. Despite a substantial number of studies in this area, there is no widely accepted definition for export performance. In this study, we provide a new definition of perceived export performance as follows. Perceived export performance can be defined as an individual's understanding of the extent to which specific financial and non-financial goals of a firm are achieved in export markets based on the criteria and benchmarks that are of importance to the manager. This definition provides a suitable point of departure for the measurement of export performance in this study for various reasons. First of all, this definition recognizes the role and the nature of firm-specific idiosyncrasies in assessing export performance and underscores the importance of considering the goals, criteria, and benchmarks that are valued by individual managers. The second reason this definition is suitable for us is that by describing performance as the proximity between the intended and attained export goals, this definition takes the role of export goals into account in an explicit manner. This allows us to go beyond the objective interpretation of outcomes of exporting and consider subjective evaluation and also the satisfaction with the outcomes. And finally, this definition accounts for both financial and non-financial aspects of export performance. The first aspect is what are the goals against which the manager evaluates export performance and what is the relative importance of each of these goals. The second question that we need to answer is what are the criteria that the manager uses to evaluate the attainment of each of exporting goals and what is the relative importance of these different criteria. The third question is about the benchmarks that managers are using and the relative importance of these benchmarks. And the fourth question relates to the level of satisfaction of the manager with regards to these different goals, their attainment. The first 3 questions identify the meaning of export performance to different managers in terms of differentially weighted goals, criteria, and benchmarks. And the last question, on the other hand, concerns the degree of satisfaction resulting from the achieved outcomes. On the other hand, we can also mention that it is the proximity between the actual outcomes and the desired outcomes. It is the definition of manager's satisfaction. based on this background, we have adopted a contingency approach and proposed a framework that enables us to measure export performance by answering these 4 key questions. So in the model that we propose here, the managerial perception of export performance is represented by a hierarchical framework. At the top of this hierarchy, there are main exporting goals, financial and non-financial goals. In the next level, we have the 3 financial sub-goals, as well as 1 non-financial sub-goal. And then we have the level of indicators. So each of these different sub-goals can be measured by different indicators. For example, export sales can be measured based on export sales ratio, export sales growth, and export sales volume. On the other hand, these are the indicators for measuring non-financial sub-goal. Finally, each of these indicators can be measured based on 3 benchmarks, and those benchmarks include firms' own plans, competitors, and domestic performance. So as you can see, there are numerous combinations of different goals, criteria, and benchmarks, and the importance of these elements are different for different managers as well. So it reflects the various alternative ways that managers can evaluate export performance. This heterogeneity and complexity poses a methodological challenge for measuring export performance. In order to address this challenge, in this study we propose a novel methodology that enables us to integrate these different elements in a systematic manner. The methodology that we propose in this study is called Fuzzy Analytic Hierarchy Process, or Fuzzy AHP. Fuzzy AHP is a powerful and flexible tool that is useful for handling complex and multifaceted problems. In this slide, I will briefly explain about AHP and how it works. AHP is a method that attempts to capture the way that individuals or groups perceive a complex problem. And it is a suitable tool for addressing complex and multifaceted problems that involve multiple and potentially conflicting goals and criteria, like the one we have in this study. So the goals can be conflicting potentially, and we have multiple goals. In order to provide a brief explanation about the idea behind AHP analysis, I need to say that this analysis is based on 3 key principles: decomposition, comparative judgment, and synthesis of priorities. So decomposition is the first step of AHP. In AHP, a complex problem is broken down or decomposed into a hierarchical model, similar to a decision tree, like what we saw previously for export performance model. The second aspect is pairwise comparison. AHP relies on the judgment of decision makers to derive priorities. The AHP model calculates these weights based on a set of simple pairwise comparisons of elements. And we will see an example of that in the next slide. And the third step is synthesis of priorities. After finding the relative importance of elements in the model, the results are synthesized or combined to calculate the overall weight or importance of elements. AHP was initially developed by Professor Sadeghi in 1980 as a decision-making tool for generating weightings associated with alternatives in the presence of multiple and conflicting criteria. In the conventional AHP, decision makers' judgments are represented by discrete values, such as 9-point rating scale. Despite the advantages of conventional AHP approach, that it is simple and easy to calculate, it has been criticized for failing to take into account some of the uncertainties that are inherent in many real-world decision-making problems. In order to mitigate these issues, a fuzzy extension of AHP has been proposed, and it is the method that we used in this paper. So fuzzy AHP is an adequate tool in order to account for uncertainties and ambiguities involved in real-world decision problems. Various methods have been proposed in the literature for conducting fuzzy AHP. In this study, we adopted extent analysis method, that is the most frequently used method in the literature. In this slide, you can see an example of a question in the fuzzy AHP questionnaire. Fuzzy AHP involves the administration of a questionnaire that is called pairwise comparison questionnaire. To collect information related to each manager's perceptions regarding the relative importance of the components in the hierarchical model, decision makers need to compare elements in each level of the hierarchy 2 by 2 and express the relative importance of each component compared to the other one. One example of the question that we ask the managers in this study is provided here. For example, here the question that we ask the manager is as follows: with respect to financial export objectives, how important is sales-related criteria when compared with profit-related criteria? So two of the elements in the same level of the hierarchy are compared to each other in a pairwise manner. So this pairwise comparison will continue at each level until all the elements are compared together and we have a full picture of the situation. As you can see in this example, instead of using rigid values, decision makers are asked to express their pairwise comparisons using linguistic variables, such as weakly or highly or strongly more important. And these linguistic terms can be quantified according to the fuzzy logic. In this study, we used the values shown in this table in order to convert the linguistic judgments to fuzzy numbers. So these fuzzy numbers are then used as inputs in the fuzzy AHP calculations to derive the respondents' relative weights of various decision criteria and the elements of the model. For more information about fuzzy numbers and the analytical details, please see the online appendix of the paper. We have provided some information there, or please see the links that we have provided before in the previous slides. To the best of our knowledge, this research represents the first attempt to apply fuzzy AHP in the international business area and certainly in the export performance area. Let's see how this framework works. Please notice that for the sake of simplicity, we have provided only a part of the original model here. Consider that we have asked a hypothetical manager about their priorities in export performance assessment in terms of goals, criteria, and benchmarks. And this framework intends to capture these priorities and give us an indication of their relative importance. For example, for this hypothetical manager, financial objectives are almost twice as important as the non-financial ones. So you can see the value, the numbers, as well as the circles that represent the importance of these different elements in each level of the hierarchy. For this manager, financial goals are almost twice as important as non-financial goals. And please note that these numbers will be derived based on the fuzzy AHP calculation. Among the financial goals, sales-related sub-goals or criteria has the highest weight for these specific managers, followed by market share-related and profit-related criteria. With respect to the indicators for measuring the achievement of sales-related goals, you can see in this slide that sales ratio is by far the most important one. It has the highest weight. Accordingly, with respect to the benchmarks for measuring the achievement of export sales ratio, you can see that for this particular manager, own plans is the most important benchmark. So let's say that we have asked the same manager about the importance of benchmarks for measuring sales volume. And for this manager, competitors' performance is the most important benchmark for measuring sales volume. So you can see that the importance of benchmarks varies for this specific manager when they are using them for measuring different indicators. Finally, we ask the managers to rate based on a 7-point Likert scale their level of satisfaction with the achievement of the firm in export market with respect to each of the individual benchmarks. For example, this hypothetical manager may give a 4 out of 7 for the level of satisfaction with respect to the level of sales ratio. On the other hand, you can see that that manager gives a 6 out of 7 for his level of satisfaction with respect to the achievement of export sales ratio with respect to competitors' performance. So you can see that two different levels of satisfactions are given for one criteria when compared to two different benchmarks. So it shows the level of detail in this model and how far we are providing a fine-grained picture of the export performance measurement. So if we continue this process that we described here for all the elements of this framework, we can capture the priorities of managers with respect to different goals, criteria, indicators, and benchmarks. Also, we will have the level of satisfactions of managers for each of the indicators based on each benchmark, right? So what we need to do is to combine all these numbers together with the logic of fuzzy AHP to estimate the overall perceived export performance of the firm for each individual manager. So this is the whole idea. We break down export performance measurement into different levels: goals, sub-goals, indicators, benchmarks. Then we ask the managers, we also ask the manager to identify or to express the level of satisfaction with respect to each of the different benchmarks. We combine these different numbers with the logic of fuzzy AHP, and we can understand the overall export performance. We illustrate the application of the IPEP framework and the simplified method using survey data collected from a sample of 78 exporting SMEs in New Zealand. Following the definition of SMEs by New Zealand Ministry of Business Innovation and Employment, or MBIE, we focus on firms with 100 or fewer full-time employees. And we consider firms from both service and manufacturing sectors. In order to understand the differences between managers' short-term and longer-term perspectives, we asked the respondents to indicate their assessment pertaining to both the most recent financial year as well as the past 5 financial years. Finally, respondents were asked to complete a survey instrument that includes both questions related to the IPEP framework and the simplified method. And it allows us to compare the results obtained from these two methods and to test whether they produce similar results. Here you can see an overview of the variations in the relative importance of the goals, sub-goals, and indicators across 78 firms in the sample in short term, and it is in the short term. You can see the mean, standard deviation, and maximum and minimum weights associated with components in each level of the hierarchy. For example, you can see that among the 78 respondents, on average, profit-related goals are the most important financial goals, followed by sales-related goals and market share-related goals. Similarly, you can here see an overview of the variations in the relative importance of different elements in the sample in the long term. These results that you can see in this diagram and the previous one suggest that there is substantial variations across the sample firms in terms of the relative emphasis that the respondents placed on the different aspects of export performance in their assessment. Therefore, these results provide further support that it is important to explicitly account for the values that managers attach to different aspects of export performance because firms show high variations and idiosyncrasy. Now, Although the IPEP framework represents a detailed and comprehensive approach for capturing perceived export performance, it is very difficult to implement it for large-scale empirical studies. And the reason is that it requires managers to complete a very long questionnaire that takes quite some time from the manager. So it is not practical to use it necessarily for the empirical studies. In addition, this measurement model involves a rather complex analytical procedure using fuzzy analytical process. For these reasons, in this paper, we build on the idea of IPEP framework and develop a simplified model of perceived export performance that is easier to implement for empirical studies. In this slide, you can see the questions that managers need to answer for measuring export performance using the simplified model. The proposed simplified model of perceived export performance is essentially based on the idea of weighted satisfaction that is underlying the IPEP approach. So we try to retain the essence of IPEP approach. This model accounts for two fundamental building blocks of IPEP, i.e. the level of importance and the level of satisfaction with respect to the performance indicators. In this approach, similar to the IPEP framework, export performance is measured based on 3 financial and 5 non-financial indicators, as you can see in this table. We ask the respondents to indicate both the level of importance of each performance indicator and the extent to which they are satisfied with the attainment of outcomes. And we use 7-point Likert scale to capture the assessment, to capture the satisfaction and also the degree of importance. To further simplify the model, the respondents were asked to conduct all the evaluations with respect to the benchmark that they used most often. Similar to the IPEP questionnaire, these questions were asked with respect to the both short-term as well as long-term perspective. And finally, the export performance measures were calculated by multiplying the perceived level of importance by the level of satisfaction for each of the indicators. So this simplified model based on weighted satisfaction offers a more parsimonious approach for measuring export performance while retaining the key benefits associated with IPEP. Therefore, we propose a simplified model as a more accessible and easy to implement measure of export performance that can be easily and with confidence used for empirical studies. So as we explained before, in addition to completing the survey related to the IPEP framework, the respondents also completed the questions related to the simplified model for both the short and the long term. Which allowed us to compare the results of these two frameworks. This table shows the simplified models, measurement variables, EFA, component loadings, percentage of variance explained, and the internal reliability. The exploratory factor analysis results revealed that financial and non-financial measures loaded onto 2 distinct factors for both short and the long term. In addition, the Chromebox alpha of all the constructs exceeded the 0.6 threshold value, which indicates acceptable internal reliability. Finally, we used the exploratory factor analysis component loadings as weight in calculating combined factor scores for representing the overall financial and non-financial export performance for each participant, meaning that these values that I've highlighted here are the weights associated with each indicator in measuring the financial and non-financial export performance, and then we combine these different indicators based on these different weights in SPSS. Our next task was to assess the agreement between the IPEP results and those of the simplified method. In order to do so, we regressed the standardized value of the IPEP results on the results of the simplified model using ordinary least squares. To check for systematic differences between the two methods, here you can see the graphical representations of the comparisons of these results obtained from the two methods. The results show that for financial and non-financial responses, both in short and long term, the two methods produce similar results. More specifically, these results support that with at least 95% confidence, the two methods produce substantially similar results. So these results provide confidence that the simplified method, which represents a substantial reduction in the time required for completing the questionnaire, also generates a good approximation of perceived export performance. In summary, this paper contributes to the conceptualization and operationalization of export performance by developing and testing two approaches for measuring export performance: the IPEP framework, or Individualized Perceived Export Performance Framework, and the simplified model. It is important to note that both measurement approaches provide integrative, multidimensional, and contextualized conceptualization of perceived export performance. However, these two methods are suitable for different purposes. This table provides a brief comparison of these two methods in terms of dimensions of export performance assessment, method and survey, and the advantages and disadvantages. Briefly, or in summary, the more complex IPEP framework contributes to the export performance measurement literature in a number of ways. It provides a systematic approach for making sense of multiple and potentially conflicting perspectives associated with the assessment of export performance. The IPEP framework enables us to break down export performance into finer elements, including different goals, criteria, benchmarks, and time frame, using a hierarchical structure. Using the IPEP framework, we can elicit managers' judgments regarding the relative importance of these elements while accounting for the potential trade-offs and complementaries between different elements. The IPEP framework accounts for the subjectivity of judgments through the use of fuzzy logic. And finally, the IPEP framework assists us to reach a synthesized assessment by integrating variably weighted components related to different aspects of export performance using a systematic approach for calculating a representation of perceived export performance. However, as we explained before, the IPEP framework provides a valuable managerial tool, but it is overly complex for large-scale data collection. The simplified model that we propose in this study aims to capture the essence of IPEP in a form that is suitable to use in empirical studies. The simplified model represents a substantial reduction in the required time for completing the questionnaire, but also produces very good results. Before concluding this presentation, I would like to take this opportunity to thank Professor Kelly Hewitt, the editor-in-chief of the Journal of International Marketing, as well as the associate editor and the anonymous reviewers of this article that reviewed various revisions of this article very thoroughly, and for providing highly critical and constructive comments. Their suggestions helped us enormously to further develop the paper and to make it more strong. Please note that this presentation only provides a summary of the highlights and key points of this study. For more information, please refer to the article. Last but not the least, I would like to thank you for taking the time to watch this presentation. Of course, we do welcome and appreciate any comments or questions regarding this topic. Please don't hesitate to contact either me or my co-authors if you had any questions. Thank you so much.